QuickBooks Online 2025. Pay employees for the first month of operations. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are in our QuickBooks Online Get Great Guitars 2025 project file we set up in a prior presentation, opening up the major financial statement reports, which are located on the left-hand side. We're in the standard reports section, the favorites area, right-clicking on the balance sheet to open a link in a new tab. Right-click in the profit and loss, which of course can also be called the income statement, to open a link in a new tab. Tabbing to the middle, closing the hamburger, noting that the default view of the reports is now the new view as opposed to the classical view, which was the default just last presentation, I believe. We can switch back to the classic view if you want to by going to the switch to classic view here, but we'll try to run with the new change that QuickBooks is doing, because it looks like if I switch back to the modern view, the modern view is winning their A/B testing, given by the fact that they're basically using it as the default now. So I'm going to assume that they're tilting that way going forward, noting, of course, this is why we update the course periodically so that we can try to keep on top of all the changes that QuickBooks Online drops. Notice that we don't have the range anymore because they're trying to clean up that ribbon up top. But if I select the drop down and scroll up, we can go to the custom dates. Let's do that. Into the custom dates, we do the range change, 010125 tab, 013125 tab. Notice we also don't have the run button because my assumption is it's going to run automatically. That's nice. I miss saying we're going to hit the run button in order to refresh. If you feel like something isn't refreshed, we still have the refresh button over here. It's a little bit more hidden. And of course, you can hit the refresh button up top. But I would think you would want to refresh in the report, which is over here. So my thought process is that the online system might be better, even possibly with different tabs, to be able to refresh things as you click on the report as an automatic function, whereas before we had to keep on going back and run it. We'll see how well that works going forward, but I will probably always be looking for that run button for a good long while until I get used to the refresh button over here, and or possibly it's now just refreshing automatically on its own. Let's go to the profit and loss. I'm going to close up the hamburger once again, select the drop down. I want to see the custom date range, so I can type it in there, 010125 tab, 013125, and then tab. It runs it on its own. I don't need to refresh it. It's automatically fresh. It's just like someone dropped it at your door. Your veggies just got dropped on your door, and there's no pirates that steal your stuff. It just refreshes automatically, and you got fresh food that you can eat. It's great. Okay, so now what we're going to do is we're going to the payroll situation. Let's go back on over to the first tab and give a recap, noting that we set up our practice file here. We then enter transactions necessary often for a new business to get capital, buying then with that capital property, plant, and equipment, as well as inventory. And then we started making sales, noting one of the other things that you might do when you first set up the company file is set up the payroll. Now, as a bookkeeper, you really want to think about how are you going to be dealing with payroll as a general rule. What kind of clients do you want to bring in? And I point this out all the time because a bookkeeper has to define, if you're going to do a job of bookkeeping, you have to define your system and then tailor your clientele to that system. If you let your clients bully you around, then you're not gonna be as efficient, right? I know this from experience. Okay, so that means the question on payroll is one of those things. Do you want to do payroll inside of the QuickBooks system, or possibly do you want to set up your general system to not be dealing with payroll within QuickBooks, because that will allow you to do more of a cash-based type of system, possibly then using payroll from a third party that can help set up the payroll, and that can make things a little bit more streamlined, but you have to work with a network that way, having a bookkeeper, which might be separate from the tax preparation, and possibly a separate person that's going to be running the payroll, like an ADP or a Paychex. I'm not advertising for them. Those are just some of the larger two that can do that process. Now, also realize that when you're doing your business or you're discussing with someone else about their business, as they grow from like a sole proprietorship, for example, to needing more help to run the business, their options, what are their options to do that? You want to keep those in mind. Well, one is you can take on partners or some equity interest in the company through either a partnership or like a corporate structure. So you have shareholders that are going to be basically investing in the company. Or you can take on contractors, hire people not as employees, but contractors, or you can take on employees. Now, there's pros and cons to each of those. If you're a sole proprietor, you want to be very wary of taking on partners or incorporating and taking on equity interest in the company. Why? Because then they have a say on what you're doing in your business. You're giving up some control over the business, and you might think, well, I'm going to hire a family member or something like that, and everything will go smoothly because we know each other. We've known each other for years, right, or whatever. But usually, two people don't have the same idea of what they want from the business, and a lot of times people don't write it down. And then, of course, if there's a divide in the partnership, you can't have two people going in different directions. That's going to be very bad for trying to make profit in a partnership. So just be aware of that. And partnerships could have multiple partners, right? You could bring in a partner, for example, that just invests capital into the partnership and maintain control if it's just money that you need and not their time invested. But if we're hiring people, we possibly need other people's time invested. So the next thing we could do is we could pull in a contractor. By pulling in a contractor, we're not going to have to deal with payroll. We just shake hands like payroll used to be, basically, and say, I'm going to hire you for a particular job. Here's the rate I'm going to pay you, or here I'm going to pay you by job. And then at the end of the job, you pay them. And it's easy to record from a bookkeeping side of things, and you have less responsibilities for the government. You might have to file a 1099, but possibly not have to do all the withholdings and be liable as heavily as with an employee. Although sometimes people won't qualify as a contractor. So it all depends on how much control they have over the particular jobs they are doing. Remembering the government is going to want to try to classify people not as contractors, but as employees, so they can force you, who they already have their hooks into, to take the money out of their paycheck, right? They already know about you. You're big enough. You're on the radar now, right? So the government's going to come after you and make you their little tax collector to take the money from the employees. So if they're a contractor, you have to make sure that they can qualify as a contractor so the IRS doesn't come after you and then say that you mislabeled them as a contractor and they should be an employee, or you hire them as an employee, which of course means you have to deal with all the withholdings and regulations, noting that employees are the most likely legal problems that you're going to have because of all the laws and regulations around employment and whatnot. And then once there are employees, then the question is, so I'm not against employees, by the way, of course. I like people being employed and whatnot. I'm just saying from a business standpoint, especially small businesses, running payroll is a added burden, like a big burden. Like it's a job in and of itself, as opposed to just paying people like you would if there wasn't all that stuff happening like a contractor. So that means, so then once we have somebody, we want to set up the payroll correctly, because remember, you're most likely to get sued from the employee. So the question is, do I want to do the payroll internally or do I want to do it externally? If you do it internally, we can go down to the payroll section here and we can set up the payroll within QuickBooks. Now, if you set it up within QuickBooks, then you're going to have to pay more to do that, because it's going to be an add-on feature because of the complexity of payroll, because payroll, due to that complexity, is basically a specialty field in and of itself at this point in time, right? So that's one way that you can do it within QuickBooks, and you could get good at that and you could specialize in that, also realizing that some things are going to add to the level of complexity with payroll. Do they have a 401k plan? Do they have a health insurance plan? Do they, right? Those kind of things are going to, do they have employees in multiple states? Notice here that we're talking about the United States in particular, because that's where I'm located. But the idea is going to be similar in other countries. It's likely that when you hire somebody, that's when oftentimes there's going to be regulations that are going to basically go into play. And when we talk about tax regulations, those are the things that differ from place to place, from location to location, which is a burden, but also an opportunity, because then you can basically specialize in taxation in particular areas and have a skill level that other bookkeepers possibly don't have. In the United States, we have a federal payroll tax system that we basically have to do, and then the states have their own systems, which might include a similar payroll tax as the federal government, or they might have a sales tax, which is a type of consumption tax that they deal with. And right, so that's going to be the idea here. Now, I'm not going to set up payroll within QuickBooks in the practice problem here, because I want the practice problem to be able to run with people that have student files and or just a practice file, like a 30-day free trial file, and payroll is not always available to do that. Payroll is also quite complex to make a course from, because payroll runs real time, and the quarters are actually different. Quarter 1 to quarter 2 to quarter 3 are different because there's caps in the payroll. So we have a whole nother course or section if you want to dive into the payroll in more detail and jump into that. Right now, we're going to give a general kind of overview of the payroll, and then we'll do the data input and talk about what happens on the financial statements if you do it yourself versus if you have, say, a third party do it, and that's where we're at. So I'm going to pull up an Excel file real quick and just create basically the payroll register that we're going to imagine. So I'm going to if you don't have to do this, I'll basically just write this out and you can use the numbers, or you can just follow along and write this out in a spreadsheet if you want as well. So I'm gonna select, let me select the whole sheet. I'm gonna right click on it and format the cells. I'm gonna make it currency, negative numbers bracketed, dollar signs gone, no decimals well, let's add decimals. Decimals added. All right, and then I'm gonna make the whole thing bold for my purposes, home tab, font group, and bold, just because I think that's easier to see in a screencast. So I'm going to say name, I'm going to call it, these are going to be my headers, total earnings, and then I'm going to call this social security, and then I'm going to call this Medicare, and then I'm going to call this income tax. Notice I'm not making really long headers, and I'm using 2 lines instead of using the wrap text feature, so I don't end up with this fat, like a wide cell. And I'll make this into a header category. So that's one way that I kind of format my Excel that might be useful. That's just to point out as I go. Net pay, social security, and then Medicare. Now I'll explain these headers in a second. Let's see if I'm going to pull this name down here. I'm going to spell check it because I'm sure I misspelled stuff. Where's my spell checky? It's not even in my favorites anymore. What in the world is happening around here? You telling me everything's correct? Whatever. It's close enough. If it's misspelled, I apologize. So let's select the whole thing. I'm going to make this look like a header now by going to the home tab, font group. I like to make it black and white, and then center it. Center in the alignment and center it. I'm going to make the name column a little bit larger. All right. And then, so I'm going to imagine 2 people here that are our employees. Adam Hamilton, which I think I spelled wrong, and Erica, I'm going to say Smith, let's say. These are our 2 employees. Now, we could pay the employees on an hourly basis, or we might pay them on a salary type basis. So let me give a quick look on our flow chart over here. How does the payroll work? We're gonna have to collect their time if they're on an hourly basis, which we might do within QuickBooks, or we can just have an external timesheet. Then we're gonna run the payroll. When we run the payroll, that happens based on the cycle that we chose, either weekly, bi-weekly, semi-monthly, or monthly. When we process the payroll, we're going to end up with withholdings that we took out, as well as our portion of payroll taxes, which I will calculate with our Excel worksheet here. Then after we pay the employees with a paycheck and do the withholdings, we're going to have to pay the government and anybody else that we had withholdings for, paying off the liabilities. On top of that, we're going to have the forms that we have to give to the government on a quarterly basis, at least for the federal government, that being the 941s, and then on a yearly basis, the W-2s, the W-3s, and a Form 940, as well as any state information, which will be dependent on the particular state that we are in. So right now, all we're doing is processing the payroll because we're trying to write a check to these two employees, but there's all this stuff I've got to do from a bureaucracy in order to get that check out. All right, so we're going to say this is going to be $60,000. I'm going to say that Adam earns $60,000. I think I put divided by 12. Is that right? Maybe I said 50,000. I'm going to say 50,000 salary divided by 12. Trying to remember what I had on my worksheet. It's 55,000 divided by 12. So we're going to pay Adam $55,000 a year divided by 12 months. So that comes out, if we pay him on a monthly basis, which we're going to assume for our practice problem here, we're going to pay $4,583.33 a month. I don't have to collect a timesheet from Adam, therefore, but I might still do so in certain industries, such as if Adam was a lawyer or something like that, in which case I would have to still calculate his time so I can bill the clients for the work that Adam has done. Now, Social Security is going to be a federal tax. So when you think about Social Security, you might be thinking about the tax that comes out of your paycheck, or you might be thinking about the money that you're going to get when you retire or something, unless and until the Social Security collapses because it's a Ponzi scheme. So what we're going to do then is we have to pay into it. We're paying into it at this point in time, which is kind of like a flat tax. So it's currently at this times 0.062. So it's 0.062. So it comes out to 284.17. So these are just round. I'm just kind of giving the general idea here. So I'm not trying to get too deep into the law right now. I'm just trying to give you an idea of how the withholdings work. Then we have a Medicare tax, which is again the employee portion is their gross pay times 0.0145, 1.45%, I believe is the current rate. Don't quote me. This is a general idea. And then the income tax. Would you call this FIT or federal income tax? This is not our federal income tax. As the employer, we're going to have to pay our federal income tax when we do our taxes, possibly with the income statement attached to a Schedule C or some other type of corporate tax return. This is the employee's federal income tax, and it's not a flat tax. This is the most complicated one. How do we know what this is? We have to get the W-4 form, and then we have to use their W-4 form, which has their marital status and all the other stuff we need in order to calculate how much we have to withhold from them using some kind of tables. And that's a complex system, easy to get wrong. If you get it wrong, easy to get sued or have a problem. Therefore, we want the computer to help us to do that. This is one of the critical things that signing up or paying extra for payroll does for us, helps us to process the W-4 for all these people and calculate the federal income tax withholding that we're required to do because the government has made us their little tax collector. So their little tax collect. This is going to be, so I'm just going to say it's going to be, I'll just type it in here. I'm going to say it's 660.01 is what I had in my worksheet. So let's type that in. So now we could also have other withholdings, like we might have a 401k plan. They might have a cafeteria plan. These, by the way, are called are required withholdings. They have to pay Social Security and Medicare. They have to pay federal income tax, or at least fill out a W-4 claiming a proper claim so that we're not liable, right? And we on our side have to say, hey, look, if they didn't pay as much money as they should have, we just went by their W-4 and we did what we're required to do by law, right? So you get this whole legal bureaucracy problem of everybody trying not to get sued by being in compliance and whatnot. And the IRS, of course, trying to come after the employer because they have their hooks into the employer more, right? And so we're just trying to be in compliance. And basically, remember that this number, I just kind of made this number up. at this point for the federal income tax, just to give a general idea. So then we're going to say the net pay is going to be subtracting out the permanent stuff. Now, they also could have voluntary withholdings. That would be the things like the 401k, the health plan, where you're offering that to the employee. So you're saying, hey, we have a 401k. Do you want to contribute to that? And if they do, we can take it out of their pay for them as a favor in that case, instead of in this case where it's not really a favor to them because they didn't request it. The government forced us to do it, right? So it's involuntary, which the government tries to say, well, it's a good thing we're forcing, but it's like if it's involuntary, I don't think it's a good thing. But anyway, we're going to say this is going to be the total earnings minus the Social Security, minus the Medicare, minus the income tax. That gives us the net pay. So they're going to get then $3,572.70, even though they earned $4,583.33. And they're going to say, hey, look, you told me that you're going to pay me $4,583 and you only gave me $3,000. You took my money. That's not what we agreed to. And we're going to be like, dude, it wasn't us. The government did it. The government made us do it. And they're going to be like, yeah, but you're the one that said you're going to pay us. And then they're going to go to the government, and the government's going to be like, no, we're not. We're the good guy. We're going to give you a refund of a few bucks after you file your taxes. It's your employer who's the mean one, that he's the one that took all your money. And that's how they play this game, man. That's how they play this sneaky game. Anyway, but we're also going to have our side that we have to pay on our side. So we have to kind of match the Social Security and Medicare. So we're going to say we also are going to be liable again for Social Security and Medicare on our expense of the payroll tax, which is a little bit unusual. So that's why we have these out here. Let's do Erica. So Erica, I'm going to imagine was $22,400. We'll just imagining Erica had an hourly rate, which I'm not going to calculate right now, but we're going to say that her total pay was $2,400. Social Security is once again a flat tax, $2,400 times 0.062. That's going to give us the 25. Wait, wait a second. This is going to be this times 0.0125. Wait, what am I doing? 0.062. What? 0.062. Right, there we go. And then Medicare is going to be this times 0.0145. And then again, the income tax that would be withheld for her, I'm just going to make up a number, $3,480. And then the net pay would be her total earnings minus her Social Security, minus the Medicare, minus the income tax. So she earned $2,400, but we only gave her $2,181.60. And again, she's going to be like, dude, I can't even pay my rent with that. You said I was going to get, and it's like, I know, but the government, you don't understand. It's not my fault. They made me take it out of your paycheck. And then, so then we got the Social Security, Medicare, and then we'll total this up. All right, let's sum this up. We're going to sum this up equals the sum. And then I'll just copy this across. So you can see that even with 2 employees and no withholdings other than the federal mandatory withholdings, this starts to get quite complex. And it's going to get more complex when we do payroll after payroll, because although I pay people electronically these days and not with a paycheck, we're still required to give like a paycheck stub. As you might recall, if you've worked in an older job, right? They give you the paycheck with a paycheck stub. And the paycheck stub is going to have to give this information, the total earnings minus the Social Security, Medicare, and whatever the withholdings are to the net pay, reconciling. But it will also have to do that on a year-to-date basis, which means that means we have to start gathering a lot of information so we can comply with not only the current paycheck, but in order to do the year-to-date information on the pay stubs for each of the employees, and compile the information in such a way that will be necessary to fulfill out and create the quarterly 941 reports, yearly 940s, and the W3 and W2 reports. So that's actually fairly complex type of system, even for a fairly small amount of employees. So if you process payroll within QuickBooks, it's going to add a substantial amount of information into your QuickBooks system because of that, right? So, and if you do it externally, then the other person or the third party will basically take on all of that kind of stuff, although that's possibly going to cost more than if you were to purchase it within QuickBooks. But they're also possibly taking on some of the liability and possibly some of the human resources kind of stuff too. So those are kind of like the pros and cons. Now also note that these withholdings that we're going to take out are going to require us to not be on a cash-based system. I can't simply wait till the paycheck clears the bank and then record it when it clears the bank with the bank feeds, in particular because there's withholdings that are involved in it. So I have to give them the pay stub, so I can't do that. And there's withholdings, which means there's going to be an accrual component to it. Now note that if you had a third party doing it, then you can almost still be on a cash-based system because you can just wait till everything clears the bank, record it when it clears the bank to just one account called payroll expense, possibly relying on yourself or your CPA firm at the end of the year to reconcile everything with the help and the use of the payroll reports so that you can do external reporting and or taxes. So that would be the most streamlined thing to do from the bookkeeping side of things. Say, I'm going to only deal with payroll when there's an external third party so that I can basically stay in a cash-based system, working also with a CPA firm who can then compile the information from the third-party payroll provider and the bookkeeper to do the tax returns at minimum financial statements if needed. All right, it's also interesting to note that we can kind of think of the total here in our register as though it was one employee. In other words, if I enter this into my QuickBooks system, I could just enter it with one journal entry for as though Adam and Erica were just one big employee rather than entering it per person. Although that comes up to a bit of a problem because this will impact the checking account. The net check is going to come through the checking account, and I'm going to have to basically tie that out or be able to reconcile that. All right, so let's go ahead. I'm going to put an underline here. It's going to put an underline here, and then we'll move on. I like to make this part blue just because that's my data input area. It's kind of my custom. So I'm going to make it standard blue. I use that blue right there because the Excel is Fun guy used to use that until he switched to green. But I still like the blue. It's nicer. It makes me feel better. The green makes me feel of the old days, the dark times before spreadsheets. All right, so then let's say that we're going to process the payroll now. Let's say if I wanted to enter this with a journal entry, then what's the journal entry going to look like? So let's say we enter a journal entry. Let's say this is on 1/31 that we're processing this. I'm going to make this a date, a short date format, 1/31. I don't need to. Well, that's fine. All right. So now we're going to say, what would the journal entry look like if we were doing this for like Adam well, let's just do it this way. This is going to be equal to Adam Hamilton, and then we've got debits and credits. Debit, credit. Now I'm going to record it with debits and credits because it's somewhat of a complex transaction, and then we're going to have Erica, and then I'll say debits and credits. Or let's do it this way, Erica Smith. And then we'll have the total for debits and credits. So we can see how this would be recorded. If you don't understand debits and credits, that's okay. I just want to give a general idea. So I can then, let's make a header across this, making this home tab font group. I'll make this black and white, and let's center it. If I want to center this across these two, I could merge it, like go to the home tab and merge, but I don't like doing that because it makes a big long cell. I like to rather undo that, right click, and then go to format cells, alignment, and then center across the selection. Boom. And then I can copy that to here, and then I'll copy that to here. Okay, so then what's the journal entry going to look like for Adam? It's going to be payroll expense. Now, so the payroll expense is going to be for the gross check. That's what's going to go on the income statement. And then we're going to take out of, and then you could imagine it this way. What's the net check is going to come out of cash. The net check coming out of cash, I'm going to report the credits as a negative number, is going to be the net check. And the credit is spelled wrong. Credit. Do I want an S on it? And then the difference is going to be payroll liability, meaning it's what we withheld, which we're going to have to pay on behalf of the employee to the government, which I could use as a plug, negative sum of these, or I can get that same number, negative sum. It's the Social Security, Medicare, and income tax. Boom. So the debits equal the credits. Boom. And so I can see the zero down here, right? And then I can indent these. So okay, and then what about Erica? Erica is going to have gross pay of $2,400. The net check is going to be the 2121, and then the difference, negative sum, the plug, goes to the payroll liabilities of this, which is equivalent to the Social Security, Medicare, and federal income taxes. So I could record it individually, or I can take this payroll register and use it as though it's just one line down here. So, right, I could take the sum of all of this, right, and then equals the sum of all of this, and boom, I put negative sum, not negative sum, just the sum. And now this would be in balance as well. In other words, here's the 6983, here's the 5730, and here's the payroll taxes that were withheld as though I think of them as one employee. So the problem with this, however, if I record it this way, is that what's going to actually clear the bank when I process the payroll are two checks, these two checks. So if I do it this way, I'm going to have to be able to reconcile the fact that in my system, it's recorded as one lump sum, and when it comes to the bank feeds, it's going to have two separate checks. So be careful of that. Because of that, I'm actually going to record it independently, each of them independently for the two employees. But if you have 100 employees, it might be worth your time to record it as one lump sum in the accounting system and let your payroll provider or something do the more detail if you're working on it that way. Now we also have our withholdings. What about this bit over here? So on that bit, we've got the payroll expenses, which might be payroll taxes, payroll tax expense. And I could do this individually, but I'm just going to lump these together because they're going to end up being paid as one lump sum. So I'm just going to say this is going to be equal to the sum of the Social Security and Medicare that we have to pay on behalf of both Adam and Erica. I don't need to break it out per person, Adam and Erica, like this sum and this sum, because I don't have that problem of these hitting the checking account individually. We're going to pay them off together. And so there's no cash involved in this transaction. So the other side is going to go payroll liability. And this is going to be negative of that, or negative of that. And that's going to be that transaction. Let's go ahead and indent that one. All right, so I'm going to make this blue and bordered. I'll make this border blue. And so this is going to be the transaction I'm going to enter. And so I'm just going to enter this with like a normal check instead of processing the payroll in QuickBooks. Now remember, if you had a third-party provider, then they would be doing all of the work for you. The checks would clear the bank, and you could take their register and enter it as we're going to do here, but it might be better to just use a cash-based method, wait till it clears the bank. What's going to clear the bank is going to be the net checks are going to clear the bank, and then the withholdings, they're instead of putting them on the books when we process payroll as a liability, which is the accrual thing to do that we're doing here, we just wait till we pay them. And then when we pay them, it'll come through the bank and we'll record it at the time it gets paid. And then at the end of the year, we can get the payroll register and the 941s, the 940s, the W-2s, the W-3s, and ourselves or our CPA firm, our tax preparer, can then do the appropriate adjustment for any accrual component in order to do external reporting and taxes, would be the general idea. But I'm going to record it for our practice problem, one check at a time right now for Adam, for Erica, and then I'm going to record an adjusting entry to record the liability. All right, so let's go back on over here just to get an idea of what that looks like. So if I went up top, I'm going to enter just a normal, I can either make it a check or a payroll check. Let's actually make it a check. I think I'm going to add a check number to it. So let's say this is going to be Adam Hamilton. Tab. Now I can't really add Adam as a employee if I do it this way, right? They're going to be basically in there as a vendor. Money's going to come out of the checking account, and let's say this is as of 01/31/25, and so there it finally popped up. So there's Adam Hamilton. I was waiting for that to populate. Let's just add him as a vendor. Well, we could add him as an employee. Should I add him as an employee? Let's add him as an... I'm not sure if I want to do that, though, because if I add him as an employee... well, let's just add him as a vendor. I'm going to add him as a vendor, even though he is an employee for our practice problem purposes. Tab, 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 tab. We can print it later. And then down here, we're going to say, what are the categories going to be? We're going to say payroll. And so they currently have wages and payroll expense. So payroll expense and wages. I don't really like wages. I'm going to use the parent account of just payroll expense of that. And then we're going to say it was 4583.33. That's going to be the full gross amount. And then we have the withholdings, which are going to be payroll liabilities. So we don't have that account yet. So I'm going to just call it payroll liabilities. I'm going to make that as we go. Tab. It's going to be selecting the drop down, an other current liability, and then the other current liability. And that looks good. I'm not going to make it a sub account of anything. So I'm going to save it there. And I'm going to put a negative of the payroll that we withheld, Social Security, Medicare income. That comes out to 101064, which is this 101064. So negative 1010, so negative 101064. And that should give me the net check, which is now going to calculate at 1010.64. So the net check comes out to 3572.69. So notice I just basically I entered a journal entry, this journal entry, but I used the plug to be cash. So I had an increase of this, debit this, credit that. The cash is what's going to decrease 3572.70. So 3572, it's a penny off, and I'm going to be okay with that. 3572.70. All right, let's keep it at that. And what's this going to do when I record it? Well, it's a check type form that we're entering to mirror what would happen in a payroll system. It's going to decrease the checking account, therefore, for this amount. Then it's going to increase the liability of the 4583.33 and, increase the expense on the income statement, and then increase the liability for the payroll liability of that amount. All right, let's save it and close it and check it out. So I'm going to go back to the balance sheet and then see if it refreshed. Did it refresh automatically if I click on it? Or I have to hit refresh here. I had to hit it a few times. But then let's scroll down. So now we're going to say in the checking account, drilling down to the checking to check it out. There's the check that we entered, 3572.69. Let's go back And then the other side's on the income statement. Let's refresh this report and then refresh it again. So it seems to be the standard process right now. So payroll expense, if I go into the payroll expense, then there's the payroll expense with that check. Let's go back to the balance sheet. And then the other side went into the payroll liability, which we set up here, payroll liability for the 101064. All right, let's go back to the first tab, do the same thing for Erica. I'm gonna enter a check and I'm gonna say this is gonna be Erica Smith. Erica Smith, I'm gonna set Erica Smith up as just a vendor. And so I'm going to say save it. And then, so there's Erica, tab, 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 tab. All right. And then down here we have payroll expense is going to be for the amount of the 2400. So we'll say, okay, 2400. And then we're going to say the other side is going to be payroll liability for the sum of the taxes withheld, which is 21840 right there, 21840. So negative 218.4 gives us a net impact on cash of 218160. There's the 218160 matches here. That looks good. What's this going to do then? It's going to decrease the checking account 218160, increase payroll expense 2400, increase the liability 21840. Save and close. Back to the checking. Let's go ahead and refresh. And then I have to, there it goes. Okay. Into the checking account. And then boom, there's that bit. And then back, net check. And then we go to the profit and loss, refresh. And now the payroll has the two amounts in it for the payroll expense. That looks good. Let's go back and then back to the first balance sheet tab. And we have then payroll liability has been impacted, two amounts there, okay? And then there's one other component. If we want to do this liability side of things, I need to record this as a journal entry because cash isn't affected for this transaction. It's only going to be on the liability side. So let's go back on over, go to the first tab. And this time there's no transaction to use to enter this. So I'm going to default then to the journal entry using debits and credits, which we could enter with a register if we want to, but I'll do it this way. We're going to say boom, boom. This is going to be payroll. Now we have taxes. Let's see if they have a tax account. Taxes paid, sales tax, property tax, state tax. We don't have, well, there's payroll taxes. So let's go into payroll taxes. Let's use that one. They have it as a sub account. So I might want to change that later. But I'm going to put it into the payroll tax account. And let's say this is going to be for 42023, 420.23. And the other side is going to go into payroll liability for 42023. And we'll just enter it with a journal entry. So let's save and close that. So now if I go back to the balance sheet and refresh it, so now we have the payroll liability should be increased with a journal entry. Payroll liability has that increase. So that total liability now is this liability plus this, which is 164926. So that's going to be payroll lab 164927. It's off by a penny. I'm cool with that. Tab to the right, run it to refresh it. And now we have, they put it in a sub account for taxes paid and the payroll taxes. I'd kind of like to take it out of that sub account. So I'm going to go back to the first tab possibly and go into the transactions and go into the chart of accounts, close up the ham boogie, and let's see if I can find the taxes. So I can take that out of being a sub account. So I'm going to go boom. And so taxes, taxes, and then here's payroll taxes versus property taxes. I'm going to edit this one and say I don't want to make it a sub account. Save it, check it out. Let's go back on over, refresh it again. And then, so now we have payroll taxes not under a sub account. So that's the general idea. And remember that we took kind of the in the middle type of strategy here between doing payroll within QuickBooks fully versus having an ADP do all the processing of the payroll externally and being basically on a cash basis. In other words, if we process payroll within QuickBooks, we would use the payroll widget and so on in order to process the payroll, so it would generate these numbers in its own type of form using not a check form specifically, but a payroll type check form, also providing all of the added information necessary to generate the pay stubs that we have to provide on a pay period, as well as a year-to-date format, as well as the added needed information that will be necessary to process the 941s, 940 W-2s, and W-3s. Whereas if we have an external person, such as an ADP or a Paychex doing that information, then we could do it the way we did it here, which is kind of in the middle, saying, I don't have to process then all of the pay stubs and whatnot and all of the information necessary to create the 941s and the 940 by person, but can rather take that general information provided to us by a register and then enter that into our system simply to get the financial statements to be correct and in order to help us to reconcile our bank statement as the checks clear the bank, which is what we have done here, which the next step would be if I go to the first tab. You'll recall in the checking account, we have these two amounts that basically cleared the bank. So we're going to be able to reconcile those to what actually physically clears our bank account. Now remember, you could go a step further than that if an external person, such as an ADP or Paychex, was doing the payroll process and just say, hey, look, I'm just going to not even be involved with payroll other than to report the impact on the cash using the bank feeds, in which case you just automate the bank feeds, in which case there won't be any liability accounts for us when we do it because we're not doing the accrual component. We're just going to be on the cash side, and I'm going to record everything to one account, whether it be payroll expense or payroll taxes. Then at the end of the year, we'll let our CPA firm and tax preparer get the register not per pay period like we did it here, but for the entire year, as well as the 941s and 940s, W-2s and W-3s, to be able to reconcile our books, breaking out, if necessary, the payroll expenses versus the payroll taxes, as well as any payroll liability as of that cutoff date, in order to do whatever we need to do, which in the United States would actually at least include the payroll, the taxes, the Schedule C if we're a sole proprietorship, or a corporate tax return if we're a corporation, or a partnership tax return, or whatever we need to do. So that's going to be the couple ideas or ways that you might set things up as, once again, a bookkeeper. And again, you really want to kind of have an idea of exactly how you want to have your general system to be set up and pick up people that fit that system, so that you can kind of specialize in a particular area generally. And if you have a team together, a good CPA firm, and possibly a payroll provider, if you're using that system, then of course that would be nice. All right, let's open up this is where we stand at this point in time. This is our balance sheet. And so you could check your numbers. Here's our profit and loss at this point in time. Let's open up our trusty trial balance just to give a quick check on that. Opening the ham boogie, going down to the reports, and I'll just type in trusty trial balance. Not trusty, just type in trial balance, but I like saying trusty because the trial balance is trusty. So I'm going to close up the hamburger boogie and select the drop down. I'm getting a little tired. We're going to go to custom date range. It's going from 010125 to 013125. Here's our debits. Here's our credits, people. And Now QuickBooks is doing something very strange, and it sorted it by our account, instead of assets, liabilities. Let's switch back to the classic view. Let's go to the classic view here. And now it's ordering it properly. So that was weird. I don't know. Hopefully they fixed that. That's kind of unusual. But now we're back to the normal, where we have the balance sheet on top of the income statement. The balance sheet going from the assets here to here, liabilities starting at the accounts payable down to the owner's equity, and then the owner's equity stopping here, and then the income statement, the income accounts minus the expense accounts. Income statement minus the expense accounts would give us the net income which would close out to the equity account, which we're calling for a sole proprietorship. Owner's equity, which for a corporation would be retained earnings, if we change the date range to 2026, because it does the closing process on a yearly basis.